Good morning everyone, welcome to the official YouTube channel of Officers Adda 24/7. My name is Amanjyot and today it's our 4th class of mock test. Okay, so today we are going to discuss another certain 10 questions related to principles and practices of banking, which are very important for your preparation for your June JAIIB exam. So first of all, good morning to all of you, and first let me know, am I audible to all of you? And the PPT is also visible. Are we good to go? Good morning Dheeraj, good morning Neelam, good morning Naresh, good morning Priyanka. How are you all? So first let me know, audio video both are okay? Are we good to go? Now, those candidates who are new to the channel, first do subscribe the channel Officers Adda 24/7 and also press the bell icon so that you will be notified about all the upcoming sessions on the Officers Adda 24/7. And if you have not downloaded the Adda 24/7 application yet, then do download the application, in which you will find the basic banking awareness questions which are going to help you, and also you can purchase the certain batches related to your preparation from Adda 24/7 application and you will get additional 1% discount. Okay, everything is okay. Now let's start with the first question, which is related to the RBI's monetary policy. So the question is asking which of the following, if RBI change the interest rate for lending banks, are affected. So we are talking about that if RBI changes the one of these instrument, one of these policy rates or the instrument of monetary policy, then on changing which of the following, the interest rate of the commercial banks will be changed, or we can say the lending rates of the banks will be changed. Is it MSF, is it OMO, is it MSS, or is it repo rate and bank rate? So what will be the right answer? A, B, C or D? Priyanka is saying D. Dheeraj is also saying D. Prajakta is saying D. Okay. What about rest? Deepak is saying D. So maximum are going with the D option. That is repo rate and bank rate. Very good. Correct. Because in MSF and OMO and MSS, it does not affect directly to the bank's lending rate, but the repo rate and bank rate, whenever changes, the lending rates of commercial bank will also change. So the right answer will be your D option. Okay. Now first, if we talk about the MSF stands for marginal standing facility, in which RBI is giving loan to the commercial banks for overnight duration for only 24 hours. Okay, that is your marginal standing facility, and the loan under MSF will be given to the commercial bank of their at their percentage of NDTL. Achha, let me know how much percentage of NDTL can be taken by the commercial bank under the MSF. What percentage of NDTL can be taken by commercial bank as a loan from Reserve Bank of India for overnight duration under MSF? What percentage is it? Is it 1%, 2%, 3%, 5%? What is it? Now second, if we are talking about open market operation and MSS, so open market operation and MSS both performs the selling and purchasing of government securities to control money supply in the market. Okay, so whenever we want to control the money supply in the market, we can use the government securities which will be sold and purchased by Reserve Bank of India, because RBI is the agent for Government of India. RBI works as an agent for Government of India. That's why we are saying that the selling purchasing of government securities will be always done by Reserve Bank of India. The only difference is MSS and OMO. The difference between the both is that in market stabilization scheme, public can directly participate, but in open market operation, public cannot participate directly. Okay, first difference is that in MSS, public can participate, but in OMO, public cannot participate directly. Second difference is that whatever funds will be collected under the market stabilization scheme, that fund will be maintained by Reserve Bank of India under a separate account of Government of India. Okay, but in open market operation, no such provisions is there. So this is the only difference between the market stabilization scheme and OMO. So MSF was introduced in 2011 and MSS introduced in 2004. Very good. 2% of NDTL can be taken by commercial banks under MSF from Reserve Bank of India only for 24 hours. Okay, and this loan under MSF will comes from the SLR portfolio. Okay, whatever loan of NDTL's 2% commercial banks are taking from Reserve Bank of India, it will come from SLR portfolio, that is a statutory liquidity ratio in which all the commercial banks have to maintain a certain reserves with themselves in form of cash, gold and security. Okay, so right answer here will be your D. Let's move forward, and second question is asking about PSL. First, let me know what is the full form of PSL and how many sectors are there in PSL. First, let me know these two things. First, that what is the full form of PSL, and second, how many sectors are there under the PSL. Now, the question is asking all loans to units in KVI sector will be eligible for classification under the sub-target of dash prescribed for micro enterprises under priority sector. Now, which of the following the percentage in which the loan will be given to the micro enterprises under the priority sector? First is 7.5%, second is 10%, third is 18%, and fourth is 40%. Which of the following will be true? Very good. PSL stands for priority sector lending, correct. The full form of PSL stands for priority sector lending. How many sectors are there under the PSL? Dheeraj is saying 6. No, it's not 6. There are total 8 sectors under the PSL. Okay, how many sectors are there? 8 sectors. Under PSL, we have 8 sectors. First of all, if we talk about the PSL, it stands for priority sector lending. So, as per Reserve Bank of India and Government of India, those sectors which need improvement, those sectors which need development comes under the priority sector, because these sectors are the basic needs to develop for the country's development. So, those sectors which become a basic need of a country to develop so that the economy will be developed, that sectors will be known as priority sector. It was introduced by Reserve Bank of India and Government of India. Okay, and RBI introduced this PSL scheme in the year 1972. Now, there are total 8 sectors under the PSL. First is your agriculture, second is your micro, small, medium enterprises, third is your export credit, fourth is your education, fifth is your housing, sixth is your renewable energy, seventh is your social infrastructure, and eighth is your others. In others, we covers maximum the weaker sections, which can include the self-help group, the SC/ST community or the categories, or the women individuals will be covered under that, the small and medium enterprises will be covered under that. Okay, so these are the certain sectors which are covered under the PSL. There are total 8 sectors, do remember that. And the right answer here is A option, that is 7.5%. Very good. Those who have given the option number A, they are correct. 7.5% target was given for the micro enterprises. It means whenever commercial banks are giving loan to the PSL, out of that total PSL, 7.5% loan will be given to the micro enterprises. Okay, the right answer will be A option. Next, what is the target for weaker section of society to be achieved by RRBs? Now, do make sure when we are talking about the PSL, whenever we are talking about the PSL priority sector lending, RBI has divided the banks into 2 categories for the PSL target, not for overall category of the banks in India, but for PSL target, RBI has divided India's banks in 2 categories. First category is your domestic bank and second category is your foreign bank. Okay, and in domestic bank, we covers public sector bank, we cover private sector bank, we cover regional rural banks, we cover small and marginal, small finance banks. So these are the banks which are covered under the domestic banks. And in foreign banks category, we have 2 categories, subcategories, in which first is those foreign banks which have 20 or more than 20 branches, and the second category is those foreign banks which have less than 20 branches in India. Okay, so this is the categorization of banks for the PSL target. So everyone is saying third answer will be C option, that is 15%. Okay, maximum are going with the C. No, we have an answer A also, that is 18%, and B also, that is 12%. Okay, so first of all, whenever we are talking about the weaker section includes many categories. As I have already told you, self-help group will be included, scheduled caste, scheduled tribe will be included, individual women borrowers will be included. After that, the beneficiaries of differential rate of interest scheme will be included. After that, all the categories related to the small medium enterprises will be included here. Okay, now for the weaker section, they have to give 15% of their A and BC or CEOBE, whichever is higher, when we are talking about the RRBs. But when we are talking about the other domestic banks, like for example public sector bank, second private sector bank, and third is your small finance bank, for all these banks the target for weaker section is 12%, but for RRBs, regional rural banks, it is 15%. And this 18% of target will be for total agriculture. The total amount you are given in agriculture is 18%. Okay, so right answer for the third question will be C, that is 15% of ANBC or CUB. Acha, what is the total target for RRBs to give under the PSL? The total loan RRBs are giving is 75% of ANBC or CEOBE, whichever is higher. Out of this 75%, 18% will go into the agriculture sector. Out of this 18%, 10% will go to the small marginal farmers. Then out of the 75%, 7.5% will go to the micro enterprises. Out of this 75%, 15% will go to the your weaker section. Out of this 75%, next 15% will go to the renewable energy, medium enterprises, etc. Okay, so these are the targets for RRBs, regional rural banks. So right answer will be your C option of this question. Clear? Now let's move forward. What is the amount under education loan for study in India will come under PSL? So under the priority sector lending, what amount of loan will be given as an education loan for the study in India? Is it 10 crore? Is it 20 crore? Is it 5 crore? Or is it 1 crore? 1 second. Okay, I have added one more option, that is none of the above. Now let me know, what is the target for education loan under the PSL? Is it 10 crore, 20 crore, 5 crores, 1 crore, or none of the above? What about commercial banks? Commercial banks have a target for 40%, maximum total loan will be 40%. Out of that, 18% will go to the agriculture. Out of 18%, 10% will go to the small and marginal farmers. Then for micro enterprises, it will be 7.5%. Then after, if we are talking about the weaker section, it will be 12%. Okay, that is the target for the public sector and private sector bank, that is commercial banks. Options are in lakh. Dheeraj, options are in lakh. Okay. Acha, those candidates who are not other part of the paid classes, what you can do, because PSL is a very important chapter for our exam. So you have to go to the Adda 24/7 regulatory bodies and SO channel. There you will find the Bank of Maharashtra playlist. Okay. In that Bank of Maharashtra playlist, I have discussed the PSL in detail in a comprehensive session. So you can cover the PSL sector or PSL topic from there also. Okay. Under the Bank of Maharashtra playlist. Yeah, very good. The right answer will be your... No, it's not lakh, it is crores. Okay, it is crores. That's why I added the other option, that is none of the above. The right answer will be your none of the above, and the actual amount is your 20 lakh. It was 10 lakh earlier, but it was changed by Reserve Bank of India. Now it is 20 lakh. Okay, so right answer will be your none of these. 20 lakh is the educational loan given under the PSL for study in India. Okay, now next question. Consider the given statement and choose the option which is closely related to the statement. Now the statement is saying it was enacted in the year 2003 to bring transparency and accountability in the conduct of fiscal and monetary action of the government. Let me know. So which of the following act is defined under this statement? Is it a Sarfasi Act? Is it a IBC? Is it a FRBM Act? Is it a Finance Commission? Let me know. A, B or C? A, B, C or D? So question is asking that a statement is defining which of the following act. So statement is saying it was enacted in the year 2003 and it was introduced to bring the transparency and accountability in the conduct of the fiscal and monetary action of the government of India. So which of the following act is it? Fifth is A, Rahul is saying C, Deepak is saying C, okay. Priyanka saying C, Ni saying B, Murli saying C, Dheeraj is saying C. So maximum are going with the C option. Achha, first of all, when you are attempting any questions in the theoretical subjects, what you can do, use the elimination method. Okay, when we are talking about the theoretical subjects in which you do not have to do the calculation, okay, you can use the elimination method. What does elimination method means? Whenever we are talking about the elimination method, it means try to find out which of the following option is wrong. Okay, first try to find out that which of the following answer cannot be of this particular question. When you find out that, because it's a human tendency, we find out the negative things very easily, right? So what we can do, we can use the elimination method in which you have to make sure that this will be the guaranteed negative answer, or this will be the guaranteed negative option or the wrong option. After that, you will left with the less options and then you can decide which of the following is true. Let's say if I am talking about it was enacted in 2003, so it can't be the Finance Commission, because Finance Commission was introduced in 1900s. If I am talking about the IBC introduced in the 2016, so it can't be the right answer. SURFACE Act was introduced in the year 2002, but it cannot be the right answer because it is related to the non-performing asset. So it can't be the right answer. So what is left? The only left act is FRBM Act. So right answer will be your C. So it was actually introduced in the year 2000. And it was passed in the year 2003 and it came into effect in 2004. So these are the 3 years which are very important related to the FRBM Act. Fiscal Responsibility and Budget Management Act, introduced by Mr. Yashwant Sinha in 2000, passed by the Union Cabinet in 2003, and it came into force, or it came into effective. It was effective from 2004. Okay, so right answer will be your C option. Correct. Next, the market in which new securities are issued by the corporations to raise funds are called. Let me know which of the following will be true. So the question is asking the type of market in which new securities can be issued. It is a primary market, is it a secondary market, is it a gross market, is it a proceed market? Which of the following will be true? Neelam is saying A, Dheeraj is saying B, Sudha is saying A. Okay, what about rest? Rahul saying A, Samriddhi saying A. Munni is also saying A. Okay. So when we are talking about the market in which you can issue the new securities, okay. Now let's use the elimination method. There's nothing like the proceed market. There's nothing like the gross market. So when we are talking about new securities, means the market is related to shares. It is obvious the market is related to securities. It means we are issuing shares, bond or debenture, etc. Now when you are first time issuing the shares, or we can say whenever the new securities will be issued, new securities or fresh securities can only be issued under the primary market, because secondary market itself this is the market for existing security. This is the market for existing security because it is already talking about the secondary market. Okay, it means when the second time or more than second time, third, fourth or fifth time securities will be sold, then it will become under the secondary market. But when we are talking about the primary market, it is also known as fresh issue market, or you can call it new issue market. So fresh issue market or new issue market are the other names of the primary market, and that's why right answer will be your A option, because we are talking about the new securities. If we are talking about the existing security, then the right answer will be your secondary market. Okay, so right answer for the sixth question is A, that is primary market. Clear? Now let's move forward. What does it refers to here? No, not FPO in the secondary market. Do understand that we are not talking about that we are selling shares for the second time or third time or fourth time. No, we are talking about the fresh issue. Whenever you are doing the fresh issue, always comes under the primary market. IPO will be come under the primary market. FPO will also come under the primary market. Why? Because in both the process, company issues the shares and public or investors purchase the share. So whenever company is issuing share, whenever company issue shares and investors purchase shares, then it always be your primary market. So IPO and FPO, in both the process, company issues shares and public purchases that. What is the only difference between IPO and FPO? Whenever company first time issuing share for the public, that is known as IPO. Whenever a company first time issuing share for the public, it will be known as IPO. And whenever second and more times, company is issuing share, it will be known as FPO. But in both the process, company is issuing share. That's why both will come under the primary market. Now what will be the secondary market? Now secondary market starts from here. When investor starts to sell the security and another investor will purchase. Now this market will be your secondary market. Because the security which investor has now selling, this is the existing security. This securities was already in the market and which is sold by the one investor to the another investor. That will be known as your secondary market. Okay, the concept of IPO, FPO, primary and secondary market clear to all? Let me know. So primary includes both IPO, FPO, and secondary market when you are selling securities of existing market. Company is not issuing the security in the secondary market. Okay. Now, next question is, what does it refers here? We have to define what does it means here. Okay. First is saying it is an agreement to buy or sell an asset on a specified date for a specified price. Second statement is saying it is a customized standard contract between two parties. So which of the following option is defining the it here? Is it future contract? Is it forward contract? Is it swap? Is it option? Or is it both A and B? So A, B, C, D, which of the following is true regarding the it? YT sessions time is 6:15 AM from Monday to Saturday. Now let me know which of the following will be the right option. Neelam is saying B. Dheeraj is saying E. That is both A and B. Okay. What about rest? Achha, first of all, those candidates who are live in the session, do like the session once. Close the chat box and like the session first, and then we will continue forward. Okay, Priyanka is also saying E, Munni is also saying E, Naresh is also saying E, Gitanjali also saying E. Maximum are going with E option, that is both A and B. Confirm. Rahul is saying B. See, there is one word which is differentiating between future contract and forward contract. There is one word. It can't be E, A and B because the word standard contract is written here. Whenever this word standard contract is written, it means there is no risk. And why there is no risk? Because this particular derivative was traded on exchange. So it is exchange traded derivative. That's why there is no risk. Okay, that's why there is no risk. So right answer will be a future contract, not both A and B. In the forward contract, when we had all are the derivatives, all are the options which are written in front of you are derivatives. Now what is derivative? Derivative is a product whose value is derived from two or more basic variables. That variables is known as underlying asset. Okay. Now future and forward contract are similar, that in both the contracts two or more than parties come into an contract and ready to sell or purchase a certain quality of goods or the derivatives on a specified date at a specified price. Okay. The only difference is that the forward contracts are over the counter contracts. And in over the counter contracts, it means there is no mediator. There is no stock exchange, BSE, NSE. None of the stock exchange or commodity exchange are participating between the two persons. Only there are two persons. One said I want to sell and other said I want to purchase. And they came into the contract. That is forward contract. No mediator will be available there. Okay. And this is quite risky because there is a counterparty risk. In forward contract, we have counterparty risk. What does this means? When there is no regulatory body, when there is no stock exchange, when there is no mediator, now there is a chances that the person with whom you have done the contract under the derivative, in future he or she will reject to perform the duty or reject to perform the obligation of the contract. So there is a counterparty risk because there is no mediator between the two persons. But when it comes to the future contract, there are not risky contracts. They are standard contracts because they are traded on exchange. In two parties, the stock exchange will be available, or BSE or NSE, any of the stock exchange will be available, which is going to conduct the trade between the two parties, A or B or whatever the parties are. Okay. That's why the right answer will be your B option, because a certain word we have used here is standard. And this standard represents that there is no counterparty risk in the contract, then it will be the forward contract. If this word is not written, let's say we have eliminated this standard word, then the right answer will be your A and B. Okay, let me know clear, the concept clear of future and forward contract. So right answer will be your B, that is future contract. Options means simply the choice. You have two choice. Options are of two types, that is call option and put option. So in call option, why we are calling anybody? When you call anybody, when you call any person, why we are calling any person? Because we need to talk to them, or we have a certain work with them. That's why we are calling. Now we are kind of a selfish persons. Whenever we call anybody, so we are calling because we have a certain need to discuss with that person. So in call option, you have a particular right to buy the security, not the obligation, but to buy the security. So in the option, in the call option, the person has a right to buy the security, but not the obligation. Okay. And in put means simply you are putting something in front of any person. It means you want to sell the securities, then you use the put option. So option means the choice. There are two types of choice. One is call, one is put. Call option is when you want to purchase the securities, or sell option is or put option is that when you want to sell the securities. Okay. And when it comes to the swap, in swap, both the parties try to exchange, or both the parties exchange between each other the financial instrument for a particular period of time, and that will be a continuous transaction. That is swap agreement. Let's say for example, RBI and Sri Lanka's bank. RBI and Sri Lanka's central bank came into a contract of swap agreement, in which RBI said that we will sell you the hard currency, we will give you the hard currency of, let's say, $1 billion. Now what is hard currency? Achha, first let me know, what is hard currency? Do you all know about the hard currency? So what example we are taking here for the swap agreement, that RBI and the Central Bank of Sri Lanka came into an agreement in which RBI is saying that we are going to provide you the $1 billion US hard currency. Okay. And for the next 6 months or 1 year, whatever duration they have decided. For that particular duration, RBI is giving them the hard currency, and Sri Lanka's central bank will start investing in the country of a certain percentage. Okay, that is known as your swap agreement. So these all are the derivatives. I think, Prashant, now clear to you the options and swap also. Hard currency means cash. Okay, what about rest? And if you don't know any term, then do let me know in the comment section that we do not know. Just write it as quickly as you can, so that we will discuss the topic and we will move forward. Don't waste time. Dheeraj is saying cash, and what about rest? So the hard currency actually is not cash, first of all. Hard currency, for hard currency you have to understand three things, or you have to remember three things. That is, first, the hard currency is the currency which is very much demandable in international market. The currency which is demandable in international market is known as hard currency. Okay. Second thing is, the currency which is universally acceptable is known as hard currency. The currency which can be accepted by any country is ready to accept that currency, that is known as hard currency. And the third is, the currency which is easily convertible will be known as hard currency. Not physical currency is not hard currency. Achha, do one thing. If any banking terminology asked to you and you have not heard about that terminology, you have not read about that terminology, then don't try to make a hint like this can be the right answer, because when it comes to the banking terminology, financial terminology, the terms represent something else, the actual meaning was something else. So in hard currency, do remember 3 points. First, the currency is demandable in international market. Second, it is a easily convertible currency. And third, it is universally acceptable currency. For example, US dollar, euro, yen, pound. These are the currencies which are known as hard currency. Because everyone is ready to accept the dollar, because everyone is ready to convert the dollar, and because dollars demand in international market is very huge. So that's why dollar or US dollar, euro, yen, pound, these currencies are hard currencies. Okay, now let's move to the next question. Who are retail investors? Next question is, who are retail investors? Yes, euro and US dollar are your hard currency, correct. Achha, the opposite of the hard currency is soft currency. The opposite of hard currency is soft currency. What does it mean? The currency is not demandable in international market. It is not easily convertible. It is not universally acceptable. For example, Pakistani rupiah. No one wants to accept. There is no demand of Pakistani rupiah. And next we can say it is not universally accepted or easily convertible. So that currency will be known as soft currency. So Joyram is saying A. Rahul is saying D. Bhavesh is saying 2 lakh. Dheeraj is saying D. Neelam saying D. Munni saying D. So maximum are going with the D option. Okay. Correct. So right answer will be your D. The investors who invest up to 2 lakh are known as your retail investor. So the right answer will be your D. That is up to 2 lakh investment. Next. What is the amount payable to the subscriber on attaining the age of 55 years under the Pradhan Mantri Jeevan Jyoti Bima Yojana? So what amount will be given or payable to the subscriber of Jeevan Jyoti Bima Yojana after he or she attains the 55 years? Is it full amount subscribed? Second, full amount subscribed with 4% interest. Third, 50% of the amount subscribed. Or fourth, no amount is payable. So which of the following will be true? A, B, C or D? For the 9th question. So first of all, Pradhan Mantri Jeevan Jyoti Bima Yojana was launched by Mr. Narendra Modi in 2015 from Kolkata. Okay, and this Jeevan Jyoti Bima Yojana provides the insurance coverage to the weaker section of the country. Okay, and the premium of Jeevan Jyoti Bima Yojana is 330 rupees per annum, and the insurance cover will be 2 lakh in case of natural death. Okay, and the age group is 18 to 50 years. But the when we are talking about the Jeevan Jyoti Bima Yojana, 18 to 50 years group can participate or can enroll themselves under this scheme. Okay, and 2 lakh insurance coverage will be given for only 1 year. So on that year you have paid the 330 rupees premium. In that year, if something happens, if the natural death happened, then the nominee will get the 2 lakh amount. Okay, and every year you have to renew this scheme. It's not like for one time you have paid 330 rupees per annum, then this scheme will continue forever. No, every year you have to renew this scheme by giving 330 rupees per annum premium. Okay, so and this scheme will cover the insurance benefit of the individual person till the age of 55 years. Okay, now this is the difference, that the enrollment age is 18 to 50 years, but it covers the benefit till the 55 years. And okay, until 55 years, the person who have taken the insurance under the scheme, if his death not happened in this particular duration, that no amount is payable, because this is a term policy. Okay, so no amount will be possible to pay. Only amount will be paid in case of the death of the person, natural death of the person, till he or she attains the 55 years. If the person survives, then a person survives more than the 55 years of the age, then no amount will be payable. Okay, so right answer will be your D option, that is no amount is payable. Next, in India, coins are minted by Government of India under which of the following act? So in our country, coins are produced by Government of India, but the distribution of coins is done by RBI only. Okay, distribution will be done by RBI, but production will be done by Government of India. Now, under which of the following act Government of India produces or minted the coins? Is it a RBI Act 1934? Is it a Coinage Act 1905? Is it Banking Regulation Act 1949? Or is it none of these? Which of the following act is there under which Government of India minted the coins? Dheeraj Singh B, Gitanjali Singh B, Samruddhi Singh B, Murli Singh B, Prajakta Singh B, everyone going with the B option. How it can be Banking Regulation Act? Let me know. Banking Regulation Act is talk about the banking services. Okay, it talks about the banking licenses, talk about the banking functions. It can't be C option, no? Okay, everyone is going with the B option, and here everyone is wrong, because right answer is none of these. Right answer is none of these. And why none of these? Because the year of Coinage Act is 1906. Okay, do make sure you are watching each and everything. Do focus on the minor details given in the question. So the Coinage Act was introduced in the year 2006, and the latest amendment was in the year 2011. So right answer will be none of these, because Coinage Act 1906 gives the rights to the Government of India to mint coins, and not the Coinage Act 1905. Okay, so right answer will be your D, that is none of these. Clear? Now, let me know out of 10 questions, how many questions you have done correct. Acha, let me know one other things also, that there are 4 mint in our country. Okay, what is the 4 mints location in country? Where these 4 mints are located in India? So there are 4 mints in which the coins are minted by Government of India, but the distribution will always be done by Reserve Bank of India. Do that, remember that. Okay, so where these 4 mints are located, and also let me know out of 10 how many questions you have done correct. Now, there is a quiz going to happen on 22nd of May, which will be live at 11 AM, and it is a interbank quiz in which you can participate and win a very exciting cash rewards. And the quiz will be on general knowledge, banking, current affairs, and banking awareness. Okay, so these are the topics in which you have to participate under the quiz. So those candidates who want to participate in this particular quiz, you can go to the description of this video and you will find the form there. You can fill the form there. Okay, you have to pay the premium before May. Okay, if you are paying after that, doesn't matter. You have a certain duration of 1 year in which you have to pay the premium in May. Then amount will remain your same, 2 lakh. No amount will be changed. Jeevan Jyoti Bima Yojana insurance coverage will remain same, that is 2 lakh, not increased by that. Now next is, we have 3 batches coming on 20th of May and 30th of May. So first of all, we have a PPB only case study batch, which is an English medium batch, in which we are going to discuss 200 case study related to PPB. And there is a whole batch in which all the 3 subjects will be included related to your case study. So these are the 2 batches in which we are going to discuss the case study. And the next is the selection batch, which is coming on 20th of May. And this selection batch is related to your crash course. So selection batch is related to kind of your crash course in which you get recorded classes, you will get the live classes, you will get the e-books, you will get the mock test. Everything will be covered under the selection batch. You do not have to go for any other product or any other batch for that particular JIB exam. So selection batch is your crash course, which is starting from 20th of May. Okay, and to enroll in these particular batch, you have to visit the Adda 24/7 application, and from there you can use a code Y496 and you will get 78% discount on each and every product available on Adda 24/7 application. Okay, and if you purchase from Adda 24/7 application, 1% additional discount will be given to you all. Okay, so these are the products which are available for your next exam, and there are Mahapack also. As we know that after qualifying JIB, you all will go for the CAIIB. So you can also enroll in the JIB CAIIB Mahapack. The price is a little high here, but you can use a code Y496 and you will get 78% discount. Okay, Mint is not in Bhopal, Mumbai, Kolkata, Hyderabad, Noida. Okay, the mints are in Mumbai, Kolkata, Hyderabad, Noida, not in Bhopal, not in Mysore. Clear? So the mints are Mumbai, Kolkata, Hyderabad and Noida. I think we have discussed this topic in the earlier sessions also, na? In which we have discussed how many press are in India or how many mints in India. Clear? So Mumbai, Kolkata, Hyderabad, Noida, we have mint. Then after that, Devas, Nasik, Mysore and Salboni, we have printing press. Clear? Now those candidates who are new to the channel, do subscribe the channel and press the bell icon so that all the upcoming sessions notification will be given to you. And again, do like the session and share with your friends and colleagues who are also preparing for JIB exam.